and welcome to the Crypto Beat. My name is Kelvin Sparks, and this is my co-host Tim Copeland, head of growth at the Block. Joining us today, we have Joe Shalom, CEO of Sharplink, co-CEO of Sharplink Gaming, and Joe Lubin, co-founder of Ethereum and chairman of Sharplink Gaming. Welcome to the show. How's it going, guys?
It's going great. Thanks for having us on.
It's going
Doing well,
great.
doing well.
Thank you.
We should probably add one of my titles, where I'm the CEO of Consensys Software. It's kind of my day job.
It's
I should
CEO.
probably know that considering I'm a former employee.
Well, before we get started, I just want to make a quick note that our Crypto IQ test is now live. Go to theblock.co/crypto IQ to take the test, showcase your smarts, and compete for 20K. On a separate note, if you're tracking the crypto treasury trade, we have some fantastic charts on our data dashboard. Make sure to check them out. Now, on today's episode about LINEA token launch and Ethereum treasury companies. So, for background, Joseph, you were previously head of digital asset strategy at BlackRock. How did that role prepare you to step into the co-CEO role at Sharplink Gaming?
Sure. First, thanks for having me. I spent 20 years at BlackRock, and the last five were among the most fun. Basically, building a small but powerful and motivated team in digital assets. And we did a few incredible things. But if you link them all together, it was about bringing crypto assets and educating traditional finance. And by this, I mean the largest institutions in the world. And we did that through helping invest in the stablecoin ecosystem. We launched some of the most successful Bitcoin and ETH ETPs in 2024, and then did a lot of work, not experimentation, in the tokenization space. And after 20 amazing years, I retired in June because I had accomplished my mission at BlackRock. But my mission at Sharplink is really just a continuation, bring institutional capital to the Ethereum ecosystem, in this case through a digital asset treasury, in order to do amazing things with large piles of ETH to benefit the entire ecosystem and the protocols that live on it. So it was an amazing journey, and I left the team in amazing hands with tons of experience now.
Understood. And for you, Joe, how did your experience as a co-founder of Ethereum prepare you for your role in at Consensys and then subsequently on to Sharplink Gaming?
Well, Consensys was started about a year into the Ethereum project, and it was started essentially to continue the vision and the mission of the Ethereum project. And so early on, we thought of ourselves as the Ethereum company, and we're a major builder of the Ethereum ecosystem alongside the Ethereum Foundation and lots of other great companies. Early on, there was kind of nothing there. We built a paradigm shifting technology that was based on Satoshi Nakamoto's invention of decentralized trust and operationalization as blockchain, and Vitalik's very powerful vision of putting a fully featured computer at every node of a blockchain network. And so Consensys was formed to figure things out, to build stuff in the Ethereum ecosystem. We tried to build some applications, and we realized, hey, there's no developer tools, and hey, there's no ecosystem to offer applications into. And so we built developer tools. We've been building the Ethereum protocol in its many evolutions for many years. We built a bunch of Ethereum clients, and we continue to do so. And gradually we've moved up the stack, and we've built applications. We've built MetaMask, the dominant non-custodial user interface to Ethereum, and a lot of Web3. And there's a lot more that we can get to if you want, but that's the through line essentially from Ethereum into Consensys.
Understood. And how did those experiences early, like helping fostering the development of your Ethereum ecosystem, shape your decision to join Sharplink Gaming?
To join, so we Consensys led an investment round into Sharplink, and we did that because pretty much we felt that Ethereum was at its broadband moment in the sense that we and many others in the ecosystem have spent about 10 years building enabling infrastructure to make Ethereum as scalable as it needs to be, as affordable, as usable as it needs to be. We got some help from the United States government more recently, and it is now quite legal to be a blockchain company, to use digital assets, to issue, mint digital assets, to participate if you're an enterprise in tokenization and DeFi. And so in achieving the scalability that we needed for Ethereum to go mainstream, what we did was we ended up opening things up to a lot of innovators, entrepreneurs, to build layer 2 rollup networks. And there are a couple different technologies that, a couple different classes of technology that we've used. Optimistic rollups got an early start out of the gate because it was an easier technology to build. Zero knowledge proof based rollups came later because some profound foundational breakthroughs needed to be made and were made relatively quickly, or surprisingly quickly. And so in seeding pricing power and encouraging all these layer 2s to establish themselves and flourish, the Ethereum ecosystem suddenly found that block space was plentiful and cheap, and that's great if you're going to move the entire web onto Web3, which is sort of the intention. But in the short term, it weakened the pricing power of the Ethereum protocol, and so prices dropped because people equated essentially cheaper block space with a lower value of the Ethereum token, and we can talk about why that doesn't make a lot of sense. And so Sharplink was an opportunity to put together a project in the image of what Michael Saylor did with MicroStrategy and Bitcoin, and raise a huge amount of money to essentially sop up a lot of the excess ether that was sitting out there, and we were happy to see other projects follow us to acquire even more ether, and as we talk about other elements of the Sharplink project, we should talk about why it's incredibly valuable to accumulate so much high-powered money.
Just quick one on that. So where are you sort of picking up this ETH? Is this sort of on the market, or is this sort of, I don't know, former Consensys employees sort of with large holdings or something like that? So sort of where's it all coming from?
Yeah, I can take that one. Almost all of it has been after the initial founding and what's called a pipe from Consensys and a number of institutional investors. Most of it has been coming either through private transactions where we issue equity, or through daily fundraising through a process called an at the market facility. So this is something very unique, a little bit technical for your viewers, where public companies can issue new shares to buyers every day. And if you take a step back, that's allowed us to raise billions of dollars of capital, and then to take that capital and go out and buy ETH. So it's largely not been an in-kind type approach. It's been raising money from new investors. And the whole purpose here is to raise that capital, buy ETH, accumulate it, because the primary purpose is to give investors access to long-term capital appreciation of Ethereum. I'd love to talk later about why we think there's a massive multi-decade Ethereum opportunity, which investors should participate in. But then, unlike what's being done in other Bitcoin like DATs, including Michael Saylor, this ETH can then be put to work. You could stake it, you can use it to bootstrap protocols, you can restake it, you can lend it in order to get yield for the investors. And then over time, as you accumulate billions and billions of dollars of ETH, there are some really productive things you can do with such large piles of ETH that we'd love to share with you, both in relation to our partnership with Consensys, but also in relation to new protocols and new chains, including LINEA, which is a new L2, which is fully EVM compatible. So the purpose is to give investors new capital, largely not current ETH holders, access to this opportunity in a superior vehicle than what's been out there in the past. And it's mission driven. It's not a financial vehicle alone.
Yeah.
Yeah,
Okay.
Tim, a little bit more color. I'm not involved in the day-to-day operations of the company, although I talk to them, talk to people nearly every day. But I believe that other than one purchase that we made quite publicly from the Ethereum Foundation, and that was basically because they liked the idea of us acquiring that ether and locking it away forever, pretty much in staking. I believe all of the acquisitions were just open market, so none in kind.
Yeah.
Yep. Okay. Cool. So the biggest thing that sort of I think I'm aware of in terms of Sharplink right now, and I'm sure you guys as well, but the essentially the stock price has dropped below NAV. I think over the last since the beginning of this month.
I
Obviously,
think we're
that's
actually back around NAV right now, aren't
We are just under, like approaching
we?
one again.
0.99? Yeah.
Yep.
yeah. So like, and obviously, there's a big discussion point with treasury companies. Obviously, it's a thing with people are thinking about with strategy. I guess I was curious to sort of understand your thoughts on sort of why it dropped below NAV over like the last few weeks, and your sort of stock buyback program, which sort of aimed to address this.
Sure. So I personally think, and I've said this publicly, this is a temporary dislocation and it's not unique to Sharplink. You've seen a lot of the new Bitcoin treasuries. You've seen many of the ETH DATs who had multiples of NAV. There's been a temporary compression, and markets are usually efficient. But when you take a step back, and this is a public company vehicle, you own the underlying ETH. You get to stake it and earn 3+% yields. That staking yield is revenue. And in a public company context, in the midterm to long term, that should attract a multiple, because all public company revenue trades on a multiple. So we've been in a short period in which we haven't been raising capital because if your stock price is not a multiple of NAV, the best thing to do for shareholders, and we're always going to do the best thing, is not to raise more capital and dilute the investors, but actually take some of the cash you have on hand and go out and repurchase shares, basically at a discount. And that's really, really good for investors. And we'll continue doing that. I think this is a temporary dislocation. And, like if you take a step back over a 3-month period, we've accumulated nearly $4 billion of ETH. That is a magnificent success and story, but we're still in the early innings. And I think in the long run, we and others are going to be able to raise capital in a way that's super efficient and accretive for shareholders. And there's a North Star that we have to measure how we're doing. And it's this idea of ETH per share, or ETH concentration, as we call it. And when we started in early June, that was a ratio of about 2.0. And you can think of it as having grown to about 3.95, meaning we're accumulating ETH and concentrating it per share in a way that's super positive for investors. And if you believe, like we do, that there's going to be a massive financial transformation where Ethereum, the network, is going to be that trusted settlement layer, not just for finance, but for many real world economic activities, it's an incredible time to buy ETH at this price, to give people a long-term opportunity. So we're actually very bullish, even though there may be a temporary market compression in this space.
Yeah, I feel price was down for a little while, roughly for the same reason that it rained in New York last week. There are cyclical things that are happening in the world. There are secular trends. when we see the price of Ether surge, we see that reflected in Sharplink. As we see the price of Ether moving back towards all-time highs and maybe cresting those highs, we're going to see animal spirits back in the market, and we'll be able to do activities that we like to do in terms of raising capital and buying Ether. Long term, for some of these tokens, treasury companies are a new foundational construct. They're going to be incredibly valuable for the long-term value to shareholders, and the long-term ability to grow infrastructure in our ecosystem.
Okay, and then just get sort of final understanding on this. In terms of the risk, like what happens if it stays below 1 for like an extended period? Sort of what would be your strategy there? Is it just more and more buybacks?
It could be buybacks, or there are other ways to raise capital in this market. And Michael Saylor has taught us that, which is to date, it's been largely common stock that we've been issuing to raise capital. We've also bought back that stock, but there's equity linked and convertible offerings that have really significant investor interest where you can raise that capital without diluting the shareholders. In fact, the dilution is actually tied to the volatility of the asset. So, what do I mean by that? Bitcoin's volatility has been coming down. Ethereum is inherently more volatile, and there are lots of investors out there who want to buy something like a convertible note. They understand that this is a volatile asset, which means our stock is volatile, and they like to take advantage of that arbitrage. So even when your MNAV is temporarily below 1 for periods, you can raise capital in other ways and continue acquiring Ether. And the beautiful thing about ETH is because it's productive and it has yield, it can easily cover debt payments, and you can raise capital in a really accretive way that way. So I do think it's temporary. We're very bullish, but we're living through a bit of a dislocation period, and that's okay.
Yeah, so for a stock with so much volume and so much volatility that is so closely related to Ether, the probability that NAV stays below 1 for a really extended period of time is so low. And so it's really about tracking the surges in Ether. It's about attracting investors who appreciate that we're growing the Ether concentration per fully diluted share, and it's about more and more investors waking up to the idea that we're going to be using our Ether. We may borrow against it at some point in the distant future when it's a giant pile of high-powered money. We'll be staking it in important protocols. We'll be bring liquidity to new exciting protocols, and essentially in the long run, we will have exposure, direct exposure to other protocols when we feel like we can't buy more Ether anymore because it's not cost effective, because we're at too high a percentage, and it'll be incredibly attractive at that period because we'll be able to achieve exposure to some high value, high volatility new protocols as well that are very aligned with Ethereum.
It's an interesting point because I mean you've got with strategy the sheer amount of Bitcoin it's sort of acquiring is definitely. I mean I was kind of surprised when it kept sort of purchasing more and more. For you, where is the sort of limit in terms of you've hit? You know, is it like 10% of Ether's supply, and then you sort of like let's not go beyond that. Let's look at other assets. Sort of, where's that line, or have you not got to that point yet?
Well,
You
we're
want to
certainly
choose?
not at that point. We're really in the early innings. The combination of Tom Lee from BitMiner and ourselves have most of the volume in the market, and together we've accumulated large numbers. Tom has said publicly that 5% would be their limit. I think we need to see how things go as we approach that. I think we're still a while away, but you don't want to do anything. If your mission is to promote this long-term opportunity, you don't want to get to a point where you pass some sort of inflection point where you could create doubt or harm to the protocol. I don't think we have a specific number in hand, but we would be committed to continue buying until we reach that terminal limit at some point. Joe, I don't know if you have a different view.
Exactly true. There will be a point in time where our mode substantially changes from ether accumulation to making use of the ether to find new ways to grow value for the company.
Cool. Would you ever look at Bitcoin, or would you be going sort of further down to the altcoin space?
My answer would be that we would want to do things that are extremely aligned with the Ether token and the Ethereum ecosystem.
Yeah,
So
we don't use the word Ethereum first. We're an Ethereum company.
okay, so it could be more things like LINEA, for instance. Cool. And then, so what would you say is next in the Ethereum treasury company space? Like, do you see any sort of developments happening over the next 6 months?
So I think, the early innings were, getting initial investors. We're all public companies, which means you have to have every type of risk management capability necessary. So we've been actually walking before we run. The vast majority of our staking activity is just in native staking with through Coinbase and Anchorage. I think as you step back and you mature and you get your arms around what the different opportunities are, and we have a distinct advantage because of our relationship with Consensys and their understanding and their diligence of the different opportunities is literally second to none. And I don't think anyone in the DAT space has access to that. We will start building a portfolio of staking that will go beyond just staking and some liquid staking tokens to figure out where we can get the best yield through LINEA, for example, and we should talk about that more, but through other means of either lending or borrowing or staking or restaking or helping basically bootstrap new protocols. And I think that will come with tremendous responsibility. But I also think the industry and the protocols will love the institutional access, the institutional endorsement, and frankly, the liquidity we're going to provide to their protocols. And I would expect that we'll be able to get enhanced returns and benefits through that. So I think step one was, acquiring the capital, acquiring the ETH, putting it in safe hands and staking. And now we're going to be doing much more in that space. And then the second thing is just over time, we are going to be building um, Ethereum operating companies. So, we historically had an affiliate gaming company. That was what Sharplink Gaming did. Over time, our expectation is with the amount of expertise we have, with the piles of ETH we have, and the closeness to Consensys and LINEA, we'll be able to build pools of IP and talent that can potentially generate ETH denominated revenue. And that's going to be a bit of a flywheel. You can get more revenue, you can buy more ETH, you can put it to work, you can build value for the ecosystem because it's not just about accumulating and holding ETH. So we're actually quite excited. We haven't shared more publicly what that is because we're in the early stages, but who better in conjunction with Consensys to build really accretive operating companies that support the Ethereum ecosystem and spin off ETH as revenue.
Yeah, so I think
Joe,
we'll continue to see crypto projects explore the DAT strategy. Certain projects will be able to do it well. Some projects may be able to do an okay job at smaller scale. Projects like Aave that is generating consistent yield and can throw off that yield is an ideal candidate. Eigenlayer is another really interesting candidate. So big yield generating and constant innovation is going to help. These companies represent a kind of fundamental new construct that straddles both traditional finance and DeFi. Part of the impact of what we were able to do with Sharplink in terms of lighting a fire under the Ethereum ecosystem is essentially based on the fact that the public capital markets are so deep and liquid compared to our own crypto capital markets. And so exposing the world of traditional finance to what we're doing is a massive shot of energy into our ecosystem. And so I think we're going to continue to see these approaches sort of knit together, TradFi on top of DeFi.
Yep, and you've even seen it recently. Like one of the questions is, you see a constant sound, a whooshing sound of deposits from banks, traditional banks going into stable coins. Those stable coins then go out and buy treasuries. What the heck are they going to do with all of those assets? You've seen the IPO of Figure, and what it's telling you is the blockchain, including Ethereum, will end up being a bridge to replace a lot of traditional activities. If banks were taking deposits as liabilities, lending it out as assets, and a lot of those deposits are now going into stable coins, well, DeFi applications are going to start filling the void of lending. And it's not just crypto lending, it's going to be, mortgages and first lien and second lien and home equity and unsecured personal loans. Like, this is the future. And you can hear that giant sound of money transferring from bank deposits into stable coins and into borrowing, lending, and swapping protocols. This is more than just crypto. It's going to start really supporting economic growth in real world activity. And the IPO figure was actually a really bullish moment for this happening on chain.
Understood. I actually wanted to go back, Joseph, you kind of touched on Linea a bit. I was curious, like, how do you think the Linea token launch went?
Um, maybe let me share a little bit of background before I answer that. I think it went incredibly well. So with Sharplink, we did a sort of game-changing activity for the Ethereum ecosystem. As I said before, we lit a bit of a fire under the ecosystem, and with LINEA, we had an opportunity to think through things from first principles, take a look at what was going on in the layer 2 rollup ecosystem, what had succeeded, what wasn't serving Ethereum so well, the fragmentation in particular, the lack of care for the mothership in extracting lots of value without giving up too much value. And even now, some roll-up ecosystems are contemplating possibly becoming a layer 1 even, which is interesting choice. We'll see if any of that activity happens. But thinking about things from first principles, first of all, zero knowledge technology is far superior to optimistic technology. A validity proof that achieves finality incredibly quickly versus a fraud proof that requires a week or so for finality is obviously superior. And figuring out what things to do to make your layer 2 feel as close as possible to Ethereum is something that we took pains at right from the start of the LINEA project. And so we set out to become as Ethereum compatible as possible, and we are 100% Ethereum compatible at the bytecode level, so all of the Ethereum clients sync to LINEA. That's not the case for other layer 2s. And with the token launch, we had the opportunity to do some pretty impactful things. One, we're paying fees in Ether on the LINEA network. We are burning some of that Ether, about 20% of the fees, and we're using the rest to purchase LINEA tokens and then burn those LINEA tokens, returning value to the LINEA token holders. We did another epic thing where we managed to convince our employees, our shareholders, our investors, that the best thing for Consensys and Ethereum and LINEA would be to take a fairly small stake for Consensys and lock it up for 5 years. So 15% of the tokens were allocated to Consensys, but the entire rest of the tokens, 72 billion is the total market cap. The entire rest of the tokens, 85%, are now part of a LINEA ecosystem development fund that will fund building, liquidity provision, incentivize usage of projects in the LINEA ecosystem, but also projects that are more purely in the Ethereum ecosystem. So we think that that sort of construct is hopefully going to put some pressure on some of the other layer twos to A, use better zero knowledge technology, B, start burning some ether, or do other things that are supportive of the Ethereum ecosystem, and C, maybe direct some research to Ethereum, the protocol as well. How did the token launch go? We had 55 minutes of complications. We provisioned for 3x higher than the max activity that we'd seen on the network to that point, and we blew that away by about 2x. And so we had some trouble processing some transactions for a little while. We had a room of collaborators from a lot of the different teams at Consensys, thoughtfully and calmly working through things. It was just an amazing thing to watch, as everybody was under a lot of pressure and just did a beautiful job fixing complex things. Bottom line, we gave away a few $100 million worth of tokens to 750,000 independent addresses. There was a lot of positive feedback. You get the professional complainers who are farming and then complaining that they're not getting. So obviously we have to deal with that. Bottom line, we launched a network a while ago. We launched a token, and now we're growing a token economy organically with over $1 billion at current market value to invest in the ecosystem. So epic success. We're so excited inside the company.
Yeah, and those some really compelling incentives that you mentioned. I'm kind of curious what you think the longer term implications are, not just for the LINEA ecosystem, but also the long tail of other just projects, whether they're EVM or non-EVM based.
So answering from Consensys's perspective and Ethereum's and LINEA's, not only do we have over $1 billion in LINEA tokens to invest in projects effectively, invest in activity, growing activity, we also have third-party tokens that like the huge distribution that MetaMask has, and so we've got a rewards program launching very soon where we will be flowing lots of different kinds of tokens to incentivize usage, and we've got some platforms that will be petitioning the LINEA Consortium, the stewards at the LINEA Consortium, and Joseph is one of those. There are a few different independent companies that are stewarding the ecosystem, and more coming. Might be an exciting announcement at some point soon. And so we'll just see us incentivizing the sort of organic development of a token economy. That's how I think we build out the Web3 world.
And if I could just add two things, like I shared that our mission is to help investors accumulate large stacks of ETH, but also to help invigorate the Ethereum ecosystem. When I have choices to make as to where to allocate that ETH, trust me, we are going to be doing it to people who take a community first approach. And if you look at what Joe just described in very simple terms, it was a token launch that was structured as a community initiative. It was not structured as a fundraiser. And when you have better incentive alignments between the builders and developers and the users than what you would typically see in a foundation launch That is actually very attractive. And then I think what's unique here is the canonical yield that you can get on LINEA is very attractive to people like Sharplink, who would like to have, on the one hand, the safety of operating not just staking in a chain that's EVM compatible, but staking in a chain that's fully aligned with the L1. And at the same time, when you do that and get the canonical yield, you're actually strengthening the L1 L2 link, and that is essentially built into what Joe was sharing. So if you're here to support Ether and the long-term usage of Ethereum, what better way if you have piles of ETH than to support these type of initiatives, especially if you can get better risk-adjusted returns than you can in other staking mechanisms. So you'll hear more about this. I've been speaking about it loudly, and this is part of our mission, is to strengthen that link, and LINEA is going to raise the standards on everyone in this space. So Joe, I don't mean to be a cheerleader here. I think about it at like a very macro level. This is a community-led initiative. It's going to give enhanced yield, and it's going to strengthen mainnet. And that's really important to people like Sharplink.
Yeah, so decentralization is of buy-in for the community. So I think you said it beautifully.
For sure, for sure. So it's cool that LINEA now has a token, but it's not the project that people have been asking for many years for a token. Will MetaMask have a token at some point, maybe in the near future?
I think we may have answered that recently and even in the past. So the Ethereum ecosystem is on the path of progressive decentralization, has been for a long time. We're going to have to keep figuring out ways to be vigilant around centralizing forces and use protocols to ensure that rigorous decentralization remains in place, and we keep driving in that direction. And Consensys is doing the same thing. So we certainly had to find product market fit for a bunch of what we built. We had to do that for Infura. We had to do that for MetaMask. We had to do that for LINEA. Infura itself, which is a tool that makes it easier for developers to write software that accesses the Ethereum blockchain. It's decentralizing itself and becoming the decentralized infrastructure network, and we already have over 60 partners helping us answer blockchain requests from software. And we'll see a DIN token at some point in the near future. We're seeing a LINEA token because we're progressively decentralizing elements of the LINEA ecosystem. We do have a group of stewards that represent governance, and we'll have a bunch of things like subcommittees that help get the work done. We will introduce greater decentralization into the LINEA ecosystem when it needs it, and when the DAO technology and our on-chain understanding of governance matures a little bit more. It's really important. We're seeing a lot of institutional interest in using LINEA, and it's really important that a major financial institution doesn't have to negotiate with the DAO. Not an easy thing to do in 2025. And the mass token is coming. It may come sooner than you would expect right now. And it is significantly related to the decentralization of certain aspects of the MetaMask platform.
Understood. And I guess Base is exploring a native token. How do you view that move on the Ethereum rollup landscape and its impact overall?
Well, Coinbase has been a great bridge to the decentralized protocol ecosystem. They do a lot of Web 2 things. They do a lot of financial institution things, and they do them really well. And Base has served them incredibly well. I think it served Ethereum decently well. I think it could have served Ethereum better. And we'll see what direction they choose to go in. I don't think it's going to be compelling for the next bunch of years as the decentralized protocol economy grows, I don't think it's going to be a good idea to squander opportunities to decentralize yourself. And so we'll see what they choose to do. All these L2s and all the L1s, really, all the old L1s, kind of look like companies. And we've seen this movie before. We've seen the big tech companies build platforms and invite projects to build their businesses on the platforms, and then the big company needs more revenue and they rug the companies, they steal their users and their revenue, and we've got to be vigilant about that sort of thing, because financial institutions like that will make decisions that they have to make, which is in their shareholders' best interest. So ideally, they understand that it will potentially be in their shareholders' best interest if they build out more decentralized platforms. But I'm not
Understood.
confident about that.
And we are running low on time, but I did want to go back to something Joseph mentioned earlier about this opportunity over the next decade for Ethereum. Can you speak to what that is and why people should be really excited about it?
Sure. Let me start with the financial angle and this idea that, like I had spent 20 years at the largest asset manager in the world. Um, Most people in the crypto ecosystem have no idea how traditional finance works. Love that, Frenchie. But just the idea that every transaction requires counterparty risk and requires trust that happens through written contracts, and that trades settle a day or two later. Certain loans, bank loans, settle on 20 days after trade date. And what happens is you have a lot of intermediaries who actually take advantage of that friction. They collect rents, they charge fees. And I think what we are going to see over the next couple of years is a massive acceleration in three areas of decentralized finance. You're starting to see it already in large scope with stablecoins. Stablecoins are roughly 280 billion. Secretary Bessent says that could easily be 3 trillion over the next few years. And that is going to be really, really important. It's going to threaten the banks, but you're going to have a net new buyer of US Treasuries as some foreign buyers are receding. So I understand why Washington is actually quite excited about this. But second, even more excitingly, is the tokenization of real world assets is at about $30 billion today. About a third of that is tokenized treasuries that are actually providing yield on chain. These aren't experiments, these aren't ideas. This is actually innovation. But wait till you see large swaths of public equities be tokenized, and look for some announcements coming up. You saw Superstate tokenized Galaxy Digital stock. So imagine individual stocks get tokenized. They are programmable, they are composable, they're running on decentralized ecosystems, they're tradable 24/7, they're more accessible to people who may not have a brokerage account. Then imagine some of the largest funds in the world. People forget that there are ETFs and funds that are measured in the hundreds of billions of dollars. There are financial institutions who are very, very interested in having new means of distribution. And the third thing was, a few years ago, you couldn't imagine institutions getting involved in DeFi, right? Like there was a lot of meme coin activity, there was a lot of NFT activity. There was, most of the lending, borrowing, and exchange was happening only in the crypto community. Institutions are coming, and they're finding ways to balance identity with access to liquidity. So when I said earlier, I referred to this idea of the Ethereum opportunity. If 60% of stablecoins are being managed and secured through Ethereum, 80% of real world tokenized assets, and if you look at the high quality DeFi assets, we are going to see a paradigm shift. And I'm not talking about in decades. We're going to see a paradigm shift where large swaths of the traditional ecosystem is going to be settling on this global ledger called Ethereum that's neutral, it's programmable, it's trusted, it's efficient, it's become very inexpensive. And so when I talk about our excitement and our bullishness, it's that is going to inure to the benefit of holders of Ether. And so now is a great time to be launching these strategies and helping investors get early access. And I know I sound like a cheerleader. I'm actually just an observer of what's currently happening. And I think all the breadcrumbs are telling you this is going to J curve, and that's going to be really, really good for decentralization and really good for investors writ large. So I am super excited. This is something that could be one of the most significant paradigm shifts that we've seen since the uh, invention of the internet. And Joe, you know, I speak a lot about the financial impact, but wait till you hear the real world economic impact and what it could do on decentralized governance. When you start seeing protocols like ERC 8004, which codify trustless agents who understand identities and boundaries and registries, you are talking about an entirely new economic model that can run on a decentralized platform like Ethereum. And I'm a futurist, I'm an optimist, but I also know and I believe deeply it's coming.
Yeah, so the macroeconomic effects, geopolitical effects on human intelligences and machine intelligences and hybrid intelligence of Ethereum and traditional and TradFi coming onto DeFi on Ethereum are just going to be so profound. But also, it's interesting to think about just how it impacts the the public equity owner right now. Public equity owners are just very arm's length from the company that they've invested in right now. What happens when a company, perhaps like Sharplink, tokenizes its equity and makes it available on chain to people around the world, and also has a direct relationship with that owner, because so we actually can do things like token gated offerings and events and things like that. So it really it changes the game for businesses that have tokenized public equity and for their investors.
Understood. Yeah. Thank you for laying out that case. I wish you continue, but unfortunately, that's all the time we have for today. I want to thank Joseph Shalom and Joe Lubin for joining this episode. As a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the block. Thanks. See you next time.
Thanks, guys.
Thanks for having us, guys.